In this video, we're going to talk about the payroll tax deferral with President Trump's executive order and a possibility of a payroll tax cut. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. So yesterday, August the 8th, President Trump used his executive order to defer payroll taxes, including student loans, renter's assistance, and extending the unemployment. But in this video, we're going to talk about the payroll tax deferral. Now, I'm going to pull it up on the screen, and this is from the whitehouse.gov's website. And I want to go through it so we can see exactly what it means for your paycheck and what it means moving forward with the payroll tax deferral. So the memorandum on deferring payroll tax obligations in light of the ongoing COVID-19 disaster. And this was issued on August the 8th. And if we just scroll down on it a little bit, we can see right here in section 2, and this is really the meat and potatoes of this memo. And it's section 2. And if we just read it right here, it says the Secretary of the Treasury is hereby directed to use his authority pursuant to 26 U.S. Code 7508A. So what President Trump is saying here, or what this memo is saying here, is that he's, by executive order, directing the Secretary of the Treasury, who is Steven Mnuchin, and he is going to use his powers in order to reduce or defer the payroll taxes. So if we just go to U.S. Code 7508A, I have it pulled up right here, and this is the authority to postpone certain deadlines by reason of presidentially declared disaster or terroristic or military actions. And in general, you can see it right here, in general, in the case of the taxpayer determined by the Secretary, again, that's Treasury Secretary Steven Mnuchin, to be affected by a federally declared disaster. The Secretary may specify a period of up to 1 year that may be disregarded in determining under the Internal Revenue laws in respect to any tax liability of such taxpayer. So that is giving the Secretary the authority to defer taxes. So Treasury Secretary Treasurer Mnuchin is the one that's going to actually be able to do this at the direction of President Trump. So if we go back to the memo and we keep on reading, and what is it referring to? It's saying to defer the withholding, deposit, and payment of such tax imposed, again, by another U.S. code, 3101A, and we'll just look at that really quickly, the 3101A, and have it pulled up right here. And that is going to be the 6.2%, which is the tax on social, or tax for Social Security. So it's the tax on your earnings for the payments of Social Security. So it's a part of FICA. So FICA is made up of the employer side and the employee side. On the employee side, it's 7.65%, which contains 6.2% for Social Security and 1.45% for Medicare. Add those up, and that's 7.65%. Now, for 7.65% of your earnings, you're going to pay the FICA tax. On the employer side, they're going to also match that same exact amount. Now, Social Security gets capped, and for 2020, it's $137,700. So it only goes up to that amount. Medicare doesn't have a cap, so it continues no matter how much earnings you have. And there's an additional $200,000 adjusted gross income, and for singles, and for $250,000 for married filing jointly, an additional 0.9% for Medicare tax, in addition to the 1.45%. But it's 7.65% for the employee side, and that is what this is referring to, but it's only the Social Security portion, so it's 6.2%. And I know that's a lot, so I hope you're still with me on it. So it's 6.2% that would be withheld from your paycheck. So currently with this, it's saying that you're going to get it back. All right, so let's keep on reading and stick with me on this. So if we're going to continue to go through the memo, and so much tax imposed by U.S. Code 3201, as is attributable by the rate in effect under exactly what we just read, the 3101A, on wages or compensation as applicable paid during the period of September 1st. So this is going to start September 1st and go to the rest of the year, December 31st, 2020, subject to the following conditions. So this is only on compensation or for those individuals to qualify of 104,000 or less. And here's where we're getting the math here. It's saying is paid generally is less than 4,000 calculated on a pre-tax basis or the equivalent amount with respect to other pay periods. Now this is calculated on a biweekly basis. So biweekly would be 26 pay periods for the year. So if you do 26 times 4,000, you get 104,000. So that's where you're getting the math, or where I'm getting the math on 104,000 for someone that's earning 4,000 per pay period. That's on a biweekly basis. So here's what's interesting about this memo and the executive order from President Trump. A lot of people have been wondering, how is he able to do this? How is he able to put this into motion? Well, if you read it and we scroll up just a little bit, it says, if I could find this section, it says, today I am directing the Secretary of the Treasury to use his authority to defer certain payroll tax obligations with respect to the American workers most in need. So he's not actually doing it. He's directing Treasury Secretary Steven Mnuchin to implement the payroll tax deferral. Now, what also seems to have gone awry is President Trump's comment that if he gets elected in November, that he will move to cut payroll tax. He will get rid of it. Now, whether or not he meant that 100% is unclear. I'm not entirely certain on that part, but they did retract or clarify, the White House did clarify it, that this would only be a payroll tax cut from September 1st to December 31st. So right now it's a deferment. So these taxes aren't due yet, so you don't have to withhold them. But at some future date, as it stands right now, you're still gonna have to pay them unless there's a movement to get rid of and basically make it forgivable. So I'm going to tell you what I think of the payroll tax deferral and the possibility of the payroll tax cut in just a minute. But before we do that, let's compare the benefits if you're back to work, what this could mean for your paycheck. So I ran the math on it. And if you're just looking at $100,000, somebody who's earning $104,000, that's $2,000 per week at 6.2%. If you just take that 6.2% and multiply it by $2,000 for the week, you can figure out the math, that's $124. So if you multiply $124 by 4, just to figure out the monthly amount, that's $496. Compare that to the unemployment benefit, and the enhanced unemployment benefit is slated to be $400, but that's per week. So that'd be a $1,600 benefit. But if you go back to work, you're going to get a benefit of $496. But that's only if you earn $104,000 on an annual basis. Now, there was also a lot of concern on what the impact is going to be to the Social Security payments if President Trump got reelected and got rid of the payroll tax altogether. That's not what he was talking about, and that's not what's going to happen. And here's exactly what Treasury Secretary Steven Mnuchin said about the payroll tax getting completely eliminated. He said that's factually inaccurate. There would be no reduction to those benefits, and the president has made that very clear. And what it did sound like, even if they moved forward and got rid of the payroll tax, rather than making a deferment, they just forgave it, so you didn't ever have to pay the tax back. They would take whatever is missing, that sum, and take it from what they're calling the general account. So they would take it basically from our taxes, from the Treasury, and just fill up the Social Security trust. Now, if you think about this a little bit differently for just a second, if you're currently going back to work and you're getting this boost in your paycheck because you're allowed to defer your payroll taxes or the Social Security portion to it, what would be the difference is if it was a stimulus check, is they would have to administer those checks. They'd have to go through that whole rigmarole of cutting the checks, making sure they have the correct bank account information, the correct addresses, looking at tax returns, and just it's really expensive to do all of that. For this, it looks like it's a lot cheaper. Rather than just saying they're going to do it themselves, they're kind of putting the burden on the payroll departments to handle this and to hold on to the money. And then they're just going to take one check to add it all up and fill up the Social Security Trust Fund. Now, they haven't said that's exactly how it's going to be, but to me, it looks like it's going to be significantly cheaper and just another way to get a boost in people's paychecks. And this is all in response to the negotiations breaking down. So President Trump can't write stimulus checks. He can't put that into an executive order, but this is one mechanism that it appears that he has the power to implement or direct the Treasury Secretary to implement the payroll tax cut. Now, on the employer side, they're still getting the benefit. And if we take a quick look at the IRS's website, we can see that from the CARES Act under the two sections that do the exact same thing, but it's on the employer side. And it's under section 2301A1 and A2 of the CARES Act, where it's deferring the Social Security portion to the payroll tax. But that's the employer portion. And we can see it right here. I highlighted it, and you can see the delay of payments of employer payroll taxes. And notwithstanding any other provision of law, the payment of 50% of the taxes imposed under Section 1401A of the Internal Revenue Code of 1986 for the payroll tax deferral period shall not be due before the applicable date. Now, Section 1401A talks about both sides of the Social Security. So it's talking about the 12.4%. So again, if you're just following along for the first time, that's 6.2% for Social Security on the employee side, and then 6.2% on the employer side. Add those up and you have 12.4. And we can see that right here. And this is US Code 1401. 1401A is right here. And then you can see a tax equal to 12.4% of the amount of self-employment income tax. So that's the self-employment income tax is both sides of the equation for the employer and the employee at 12.4. So the memo or the executive order from President Trump takes care of the employee side of the 6.2%. Now, there are some technical questions that are unclear. Will payroll go to each individual and ask if they want to actually withhold the Social Security portion or not, because it's not a automatically forgivable amount? Or are you just going to get the 6.2% in your paycheck and you're going to have to hold on to it with the hopes of possibly having to repay it at a future date? So as it stands, it would make sense to either just put this to the side, unless you desperately need this money, put it to the side so you don't end up with taxes and penalties after December 31st if you can't make the payment. Or can you just elect to keep on paying it, and if it gets forgiven, will it just be basically a refund or a credit on future taxes? So technically those answers still aren't out, and we're gonna have to wait for more guidance on how to handle that portion to it. But if you do need the boost of 6.2%, it looks like that's available as of September the 1st. And at the end of the day, if you don't want to withhold the money from your paycheck, or you do want to withhold the money for your paycheck, that's up to you. So it sounds like you still have the opportunity to continue to withhold that money from your paycheck and pay those taxes, rather than saying, okay, I'm going to get the money back in my paycheck automatically and then have to worry about that at a later date. Now, I wanted to go through that because in the previous two videos, because it was positioned as the payroll tax, I said it was 7.65% for the employer and the employee, but there's clarification on that memo that says it's only for the Social Security portion, and the CARES Act already has it for the employer, so that's kind of a moot topic. So it's only the 6.2%. The 1.45% for the Medicare side still looks like it's going to be withheld and have to be paid in a timely manner. And what I was talking about on Saturday morning's video with the different outcomes of using the executive order versus the stimulus package, and this is one of them. So we have an executive order. Now, the only other thing that could really happen at this point is getting a stimulus package to potentially replace or supplement some of these executive orders. So it's still not off the table to get additional stimulus. It just comes down to a matter of whether or not Congress will get together and come to an agreement on what the next step is. But in either case, this is just one more option that if you do need that money, it's available and will help boost your paycheck to get through the pandemic. And that's the update for the payroll tax deferral. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.